I think the natural gas market tends to be not as popular with retail traders as other energies such as crude oil, but it's a really interesting market to watch. And you can see here the last couple of years to get a taste for the volatility. It's been a fairly flat year so far in 2021, but is this about to change? I think natural gas is always an interesting one. I've got a really long-term chart here going back almost 20 years, and you can see the surges that we see now and again, then the collapse that follows. We've seen from a longer term point of view, perhaps slightly more subdued trading over the last few years compared to the first decade of the 21st century. But there are still plenty of opportunities. For me, what's interesting in natural gas is the moves that we saw last year. We saw it slip to its worst levels in 4 years. But I think the strength that we saw in the second half of last year for natural gas changed the trend. You know, we did see the market run as high in early November, up above 340. Seen a bit of choppiness since then, but I do still think there's an opportunity in natural gas. So as usual in this video, I'll talk a bit about what's been going on with the price, then we'll come back and look at things in a bit more detail. We do actually have a trade running at the moment. So we bought in on the 15th of March. I was a bit confused when we did this trade because we haven't done a natural gas video for a while, but I've realized this is an order that was left from the last time we looked at natural gas, which is quite a few weeks ago. So we ended up buying 1,000 at 255 with a stop loss in at 220 for the usual risk. That trade is in profit, but I think there's actually another trade to be done here, given what's going on with the price. So I'll talk a bit more about what to watch out for, then we'll come back and look at this in more detail. Hello, I'm David Jones from Capital.com, and I thought we'd do an update on natural gas. We haven't looked at it for a while. It's been a choppy but ultimately directionless year. But I think if history tells us anything from natural gas, is that things can get interesting very quickly. So I thought, well, let's do an update on where the price is now, what's been happening, and what perhaps to look out for in the days and the weeks ahead as we go into April. So as usual on this, I'll talk a bit about some of the news behind it, then we'll jump back onto the platform, look at things in more detail, and see if there's a trade to get on. Because I do think there is a trade to be done here. If you're watching this and you haven't subscribed, if you could click on subscribe, it does help support the channel, means we can continue to push out lots of different content throughout the week on all the different markets we cover. Okay, let's get into it and let's take a look at natural gas in a bit more detail. So 2020 ended up being a really volatile year for the price of natural gas. We saw it trade down to its worst levels since 2016, and then going into the last quarter of the year, in October, it jumped up to an 18-month plus high. It's been a fairly sluggish market over the last 4 to 6 weeks. Since mid-February, we've seen demand pretty much in decline, and we've seen production continue to grow. So we have seen something of an imbalance when it comes to demand and supply, and just choppy trading for the price of gas overall. There was the potential for some drama with that ship, I'm sure that we all know about, stuck in the Suez Canal. The Suez Canal sees the vast majority of one of the world's largest liquefied natural gas producers, Qatar. Most of its production goes through the Suez Canal. So I think if we'd seen an extended blockage there, that could have had an impact. But again, at the time of recording today, it looks like that ship is finally being refloated. So perhaps any drama caused by the canal isn't going to happen when it comes to gas and other energy prices. At the moment, many analysts are expecting warmer weather end of March and through into April. So most of the commentary you read is taking a fairly neutral to slightly bearish stance on the gas prices in the weeks ahead. But we know this is a market that can really wrong foot people. So I do wonder if this is where there's maybe a slightly contrarian opportunity to go with here. It has been a dull year so far. If you look at where natural gas was end of 2020 to where it's trading now, yes, we've seen some swings in volatility along the way, but it's pretty much unchanged year to date. So are things about to get a bit more interesting? Let's take a look at some of the levels to watch, then we'll jump back onto the platform and see if we can set a trade up. So over the last month on the upside, I think we've got some resistance, some problem areas running from about 291 to 305. Those are mid-September highs, that sort of level. But lots of support below where we are now. 242, 245 has been a good base in recent times for the price of natural gas. But as usual, let's put some color on these numbers. Let's take a look on the charts and see where the opportunity might be. Let's start off looking at some indicators first. We'll go through a few technical indicators and then we'll take a look at the price action. So I thought, well, let's kick things off with Bollinger Bands. And it's been fairly well behaved, I suppose, is one way of describing the gas price this year. Whenever we've seen it knock back to the lower end of the bands. And don't forget, Bollinger Bands are designed to capture 95% of price movement, of volatility. It's a way of measuring volatility. When the bands go wider, volatility is increasing, picking up. When they're narrower, volatility's dropped off. It looks like, looking at the width of the bands so far this year, it looks like volatility has been pretty constant all the way. But if we go to the end of last year, we can see when the price was falling in November, we'd hit the bottom end of the band and the price would turn round and at least retraced to the middle of the bands, to the 20-day moving average there. It's a theme that's carried into this year, banging around within those Bollinger Bands. Short-term trends, but nothing really sustainable. The latest move we've had came to the lower end of the bands, 18th of March this year, mid-March, a couple of weeks ago. And we have seen it bounce so far. And I think it is quite interesting that low was set up down there, but more of that in a second. Let's take a look at the RSI next. So here's the RSI. We've got this chart going back to September last year. Coinciding with that move to the bottom of the Bollinger Bands, we also had the RSI going oversold in mid-March. That's pretty much the most oversold it's been for the year so far. We've got to go back to December last year to see this is a 10-day RSI, this oversold. The market has pulled away from those lows since then. So again, suggesting that perhaps at these lows, around the 245 mark, there's clearly a shift in supply and demand from a trading point of view, that investors, traders, whoever, see value in natural gas when it's slipped below 2.5. So again, I'm wondering, have we seen a short-term base for the price of natural gas? And then finally, if we look at the MACD, it's really signaling the same sort of thing. So we have the Bollingers, the RSI, and the MACD signifying that perhaps we have seen at least a short to medium term base for natural gas based on what the price is doing. The last signal we had, sell signal we had, was in third week of Feb from the MACD. Then the MACD moves down with the price. Price makes a base, starts to rally, and we had a buy signal off the MACD around the 24th, 25th of March. So at the moment, at least, everything is suggesting, from a technical point of view, going slightly against, I think, the broader supply-demand economic outlook, that we could see weakness from here, that actually perhaps the price has gone far enough. So let's take a look at the all-important price action. So in previous videos last year, we'd made some money on the way up on this rally from, June, July lows, down around 150, 165, that sort of area. Good trend up that saw the price, more than double off those lows in the end. We lost the trend line. The price just sort of edged lower. We had a correction. I suppose we could pick up on the trend there. So the trend on the way down looked something like that. Then we had a trend, short-term trend, going the other way for a couple of months, and it's fallen out of that. And we've edged back to these lows where we saw all these technical indicators give a buy. And for me, it is interesting, that recent low. Because if we go back to the December lows, early December lows, they came in around 238. Jan lows came in around 242. It did gap a lot lower, late December, down to sort of 228. But lots of support. And even if we pick up on this low back here, from the 12th of August, down at 218. So lots of support running from 218 to 240 for the price of natural gas. So this is why I do think there's an opportunity here. We got filled on that other trade, buying in at 255 on the sell-off in mid-March. I'm wondering, should we add to that trade? So if I'm going to be a buyer here, if I think the price actually is going to creep its way back up above 3 from here to have a look at those mid-February highs. That's the trade I'm thinking about doing on natural gas. The only question is, where does my stop go? The tightest I want my stop, the other side of those 18th of March lows at 245. I could go the other side here, 242. What I'm actually going to do is pick up on these 226 lows, end of December. So I'm going to give the price quite a bit of leeway here. You know, perhaps one way of doing this is to set up an order, because we do have plenty of volatility in natural gas. So I'm going to put my stop loss the other side of 226. Let's say I'm going to go 220 for a stop, and I'm going to put an order in if we pull back into the range. So we saw a low. If we flip this over to an hourly chart, it might make it a bit clearer. So we had that recent low where you can see it really rallied off it strongly. That low at 245 has bounced back to about 265. So to make it simple, I'm going to put my order in. I think where my previous order got filled, if the price gets knocked back to 255, that sort of level, I want to be a buyer. So I'm a buyer at 255 with a stop at 220. Let's set the trade up. So if I buy 1,000, if the price drops to 255, which is only 8 cents below where it is now, so basically moving back into the range from Thursday of last week. If that order gets filled, put a stop at 220. So that would mean new lows for the year if we saw the price trade back to 220. And for the usual risk on these trades, if you've watched any of these videos, you'll be familiar with it by now, of £250 or thereabouts. Let's place the limit order. So the limit order is placed, buying 1,000 natural gas at 255 with a stop in at 220. And I think that's a fair enough trade. If we take a look at it, there's the order. So there's the order I just placed, sitting there in the market, waiting to see if it gets filled at 255. My existing position is doing okay. It's the same trade. I bought in at 255 with a stop at 220. That's up about £60 so far, slightly in profits. But let's see if we get a bit of volatility in the days ahead. The price moves back down, and ultimately my immediate target is for a run back up to those mid-February highs above 3. I think if we do start breaking down to 220, clearly things have changed massively because we're on new lows for the year. But for now, there's lots of support in this area. I'm banking on it holding. Let's see how it turns out. That's it for the update in natural gas. Dull so far, has a tendency to not stay dull for long. Let's see how things work out and come back and do an update in a few weeks' time. But for now, for natural gas, that's it from me, David Jones, and Capital.com. For more trading videos just like this, please subscribe to our channel.